why would I care about this loan program? And fundamentally, this loan program is going to give you more buyers, more prospective buyers for the distressed, or what I like to call deferred maintenance properties. So REOs, or properties that have been held for a long time that just haven't been updated. We like to say the kitchens that are stuck in the 70s, the avocado colors, and you'd be surprised what you see, but you know what I'm talking about. More buyers, more prospective buyers. In other words, someone walks into this property and says, oh, I can't afford to fix it after I buy it. I can't consider this property. The 203K allows them to consider it. You're going to get higher offers with fewer concessions on these kind of as-is problems because they can include that fix-up in their escrow and in the bid to repair the house after they complete the purchase. I would say that the 203K requires a little bit more work as a buyer. So if you're a buyer and you say, I'm going to try to get a better deal, I'm going to try to buy a house that needs some work, and I'm going to make it my own. Those buyers are less likely to fall out. They're more committed. They're more committed to the process. They're not going to jump off to another house that they find. They're buying this house because of the locations, as we say, the bones of the house. They're not buying it based on a whim, and they're not going to fall out as easily. And I think we've hinted on this. We'll be selling houses that you may not have otherwise been able to sell using this renovation loan product. So how it works, and we'll talk about the streamlined program, the highlights, qualifications, and type of property types. Basically, you can borrow up to $35,000 over the first mortgage. In other words, over and above the purchase price of the first mortgage. You can renovate an existing home through a refinance or a new purchase. So you cannot complete a new construction, though. So you can't take a half-built home and finish it. But you can renovate an existing home as an existing homeowner, so it's a refinance eligible product. We'll talk about how that's relevant to realtors near the end. You can use it for a new purchase and fix problems. It is an FHA loan, so it's got the same kind of easy credit qualifying capability, so your home buyer does not need to be gold-plated. And you're going to find that when you look at these, the numbers behind a 203K, you're going to add instant value to the home, and I've got a few examples near the end. Qualifications, what does it take to qualify as a home buyer? Basically, your general FHA guidelines apply. You need to be approved eligible, a minimum FICO of 640, the same as a regular FHA loan. You'll find that you'll see a $75,000 minimum loan amount, including the first mortgage and the rehab component. You can have gift money, so the borrower can come in with absolutely no money of their own, have gift from a relative or family member per FHA guidelines. With the 203K, we do not allow down payment assistance programs. We do not allow participation in the HUD 100 down program or grant programs that are available in certain states and municipalities and so forth. You're going to also find that the Good Neighbor Next Door FHA program is not going to be eligible to be combined with the 203K. Good news for realtors, interested party contributions go up to 6%, so your seller, your lender, the agents as a part can contribute up to 6% of the sales price to help close the transaction or pay closing costs. So the seller cannot pay part of the down payment, but they can pay the additional closing costs, both reoccurring and non-reoccurring closing costs. So what kind of properties are we looking for with an FHA 203K? Traditionally, these would be properties that wouldn't pass the FHA inspection. So you go through the process and, oh gosh, there's something wrong with the house, that it's got a deck that's falling apart, but the borrower doesn't have enough money to fix it. The loan actually can't close to fix it in advance, and the seller doesn't want to fix it. So traditionally, the 203K would jump in when the property fails the appraisal inspection component. It goes beyond that. It can be distressed or deferred maintenance, out of date or out of style. 100% of the fix-ups in the bid can actually be cosmetic, which indicates that the property could be 100% perfect for the appraisal, but it's just out of date or out of style. And then, of course, the last category would be properties that we know are going to fail some type of pest or dry rot Section 1, and the pest inspection is required via the contract. And we can talk about that offline a little bit as far as whether pest is required on a FHA 203 case. Technically, it's not. You can waive it, but that's often a reason that a purchase hits a wall is because of those pest issues. So eligible properties, basically anything that FHA will finance with an FHA loan for an owner-occupied purchase. In other words, a single-family residence, 1 to 2 units, where your buyer is going to be occupying 1 unit. FHA-approved condos or PUDs. And if you are doing a 3 or 4 unit property, you're going to find that more months of reserves are required. On an FHA loan, there's no reserves or asset requirements when they close the purchase, whereas if it's a 3 or 4 unit, they're going to want more. What's ineligible? You can't do a non-FHA approved condo or PUD. PUDs don't have to be FHA approved in the current rules. Mixed-use properties that have a commercial component and a residential component are going to be ineligible, and modular, pre-built, or manufactured homes are ineligible for FHA 203K. Property valuation and repairs. Little keywords here and a key phrase. We'll talk a little bit about how value is determined and so on. So value is determined by what the property will be worth after the repairs are done. That's what the loan is going to base its mortgage on. The repair escrow plus the purchase price can't exceed 110% of the subject to value, which is defined as well, actually, let's go through all those. As is the condition and value of the property before any repairs are done, where subject to is the condition and value of the property after the repairs are completed. And the as completed is similar to subject to. This is the condition or value of the property once repairs are done. So it's really subject to and as completed are kind of used somewhat interchangeably by appraisers and by the underwriters when they look at this loan. So one thing you'll notice is that, well, gosh, as a real estate agent, I have the opportunity to look at what this property is worth as is, and then actually after completing whatever the repairs may be. So I'd encourage you to start putting the thinking cap on as what do you do differently when you're considering this type of purchase in advising a buyer, and that is taking a look at what the property would be worth afterwards, after the completion of the eligible improvements. So eligible improvements, the next series of slides are going to focus on what you can do in the FHA 203K, the streamlined version of the loan, which is the most popular. And we've got a list that's downloadable of those eligible improvements, a checklist that you can use as you're showing these properties for looking at the different types of repairs that might be done. But you can replace, so I'm going to start moving through these really quickly. Jump in if you have any questions, and I do see one question on there, and on that question we'll try to get to it at the end here as well. And just as a reminder, the recording will be available at the end, so if you like these slides, want to share them with your colleagues, that's what we want to do, is share the recording and have them attend a future webinar as well. We're allowed to repair the roofs, the gutters, downspouts, anything. You can basically replace the roof in this loan. Totally eligible to just tear the roof off and start anew. So if you have a property that needs significant roof repair, your radar ought to go up and say, hey, it's not as is with the hole in the roof.